the startups in India and some of the up valuations and down valuations that they are witnessing, especially when it comes to a very famous global investor, Prosus from the Netherlands. This Dutch investor has come back into the news again for devaluing BYJU'S. Once upon a time, a decacorn, above $20 billion worth of valuation, $22 billion worth of valuation, now down to just $3 billion. Can you believe that? But then again, that story doesn't stay the same. With BYJU'S and the edtech sector going through some really trying times, you have somebody else, a B2B e-commerce company like Meesho, where the valuations have gone up, whereas Prosus has managed to hold on to the same valuation when it comes to its investments in companies like Swiggy as well. But let's understand how this works from the point of view of one foreign investor into startups across the board, across sectors, across verticals here in India. Karthik, simple question. BYJU'S is a known story. I mean, the story has been going in one direction for the last 6 months. Yes, there's a new milestone. There's a new milestone of the wrong kind that it has hit. But the fact of the matter is that it's a mixed bag. Startups in this country, which were once upon a time the big headliners, have been through their own course. Some have emerged stronger, while some others haven't.
Absolutely, Krishna. And I think, it's important to understand that there is a difference between a markdown in valuation and a down round in investing, which means that on its own books, what is a markdown? A markdown is on its own books. Prosus, and Prosus, of course, is a renowned, celebrated investor and has its fingers pretty much in every startup sector within the country.
Right.
Now, Prosus, on its own books, has marked down the valuation of two companies, and incidentally, BYJU'S is not the biggest loser.
Right.
I think in terms of percentage over the 3 rounds of slashing valuation, BYJU'S has hit the worst. But BYJU'S is not the only one. PharmEasy, in fact, has returned the lowest IRR or internal rate of return to Prosus, the investor. Having said that, the difference between this markdown and a down round is that none of these companies have actually thus far gone for a down round. In a down round, you actually raise capital at a reduced valuation. So this is just a markdown on the books of Prosus. However, if any of these companies were to now go to the market and raise value, especially the ones who are marked down, this would be treated as a benchmark and they would have to shed more equity to raise the same amount of capital as they would have if their valuation was not marked down.
Fair enough. Now, before we go any further, Karthik, so let's try to make this even more simple for people understanding. When you say valuations have been marked down, valuations have been reduced, that essentially tells you the actual worth of the company.
Yes.
Right? So BYJU'S' worth, which we thought as as watchers, once upon a time it was worth $22 billion, a double decacorn.
That's right.
In that sense, not a single decacorn, but a double decacorn.
Yeah.
But today is $3 billion. You have companies which are, which haven't made a peep as compared to BYJU'S, who are valued double, triple that of BYJU'S.
Absolutely. But again, coming back, I think the last valuation that we saw of BYJU'S at $22.5 billion was in July 2022. That was the value at which it did the fundraise. So it actually got money at a valuation of $22.5 billion, and hence all its investors would have marked up their values in their books to a figure of 22.5.
Right.
It's not necessarily Prosus that would have invested in BYJU'S at that valuation, but as an asset lying on the books of any of the investors, it would have been a markup. Now, investors like Prosus, including Prosus, are believing that the real value of BYJU'S is possibly just a fraction of that, and Prosus has done it for the third time. It brought down the valuation. The first time it slashed it down to about 5.9 billion, followed by about 5.1 billion, and now it's down to a trickle just about 3 billion or so. But like we said, BYJU'S is not alone, and let's look at some of the portfolio companies of
BYJU'S is not the best story to talk about when it comes to Prosus' India portfolio, Prosus' India report card. Companies like Meesho, a B2B e-commerce company,
which
has been a stellar performer, 40+% IRR.
32% if I'm not mistaken in the case of Meesho.
Another 30% is PayU India, the payment gateway as well. These two have been stars, whereas Swiggy, the food delivery business, the quick commerce business under so much fire, still managing to be in the green in the Prosus portfolio.
Absolutely. So Swiggy continues to be in the green. Meesho, like you mentioned, PayU, as you mentioned, have been the top performers in the startup report card of Prosus. And I think, again, there are these matrices that Prosus, like every other investor, looks at. What are these matrices? Number one, is there a clearer path to profitability? Is there some very obvious signal of exponential growth in revenues or exponential narrowing of losses. That seems to be the case in the case of Meesho, in the case of PayU, and in the case of Swiggy. In the case of Swiggy, the path to profitability has now been shortened because of the narrowing of losses coupled with growth in revenues. Even in the case of Meesho, and incidentally both Meesho and Swiggy have already been written down. There has already been by Prosus itself in the month of June or July this year.
Right.
Prosus had in fact marked down both Swiggy and Meesho. But the fact that it is keeping it constant right now, not marking it down, in line with the markdowns that we have seen in PharmEasy as well as BYJU'S, it definitely finds itself in a more comfortable zone, if not a completely overvalued or safer zone. It is in a more comfortable zone.
And incidentally, apart from all these big names, I was just checking out companies like Eruditus, Executive
Which is also
Education,
an ed-tech company. So
an ed-tech company doing well in this portfolio.
You would want to find a pattern that, hey, ed-tech, PharmEasy, online pharma, COVID spurt, obviously not as lucrative as it was. But of course, there are other edtech companies as well. However, the difference between Eruditus and BYJU'S being the fact that the former is actually into executive education, is not really looking at the K-12 model, is not really looking at extra
high-value
classes,
customers.
high-value customers who are looking at upskilling, who are looking at reskilling, and these are courses affiliated to the best universities globally. You get a certification course and you happen to do that course online. So you can't really try and draw a pattern here specifically that, hey, all food tech is doing well, perhaps not, or all edtech is not doing well, perhaps not.
Perhaps
so I think
not, yeah.
it's a company-to-company analysis that has been done by Prosus.
Right, and like Meesho, which is essentially a B2B company, which means none of us consumers come into contact with the companies like Elastic Run are also doing really well in Prosus
absolutely.
portfolio.
Again, linked to the e-commerce space, and then you can obviously draw some sort of inference that e-commerce traffic, footfalls, clicks are of course always on a constant high, on a constant rise because of internet penetration, cheap data, more people getting easier access to smartphones, etc. So overall, there is this e-commerce story which is still perhaps not at a stage where its valuation is overinflated and it's a bubble that could burst.
Probably the big hope going forward amidst so much uncertainty